To kick off our presentation, our first major decision was selecting our trading instrument, which is crude palm oil futures, commonly known as CPO, based on four core pillars. First, economic significance and real value. As a heavily traded contract on Bursa Malaysia derivative, SCPO isn't driven by random speculation. Its price directly reflects global demand across key sectors like food, domestic, and biodiesel. Second, high liquidity and efficient execution. In any trading environment, liquidity is king. FCPO offers deep market liquidity, allowing us to enter and exit position rapidly without significant slippage, making it perfect for testing our strategies. Third, strategic volatility and trading opportunities. Volatility equals opportunities because FCPO prices fluctuate dynamically based on weather patterns, supply shock, and global export demand. It provides frequent setup to observe and exploit. Finally, global relevance and education value. Since Malaysia is a leading global producer of palm oil, trading this commodity gave us invaluable practical insight into agriculture economics and futures price formation. Moving on to our workflow, what exactly did we do throughout this assignment? Our strategy was structured into four execution phases. Phase 1 was asset selection and justification. We begin by identifying our core instrument, FCPO, detailing its structural nature and unique economic significance to market traders. Phase 2 was market analysis and trading plan development. We combined technical analysis, fundamental analysis, and expert opinion to build our trading plans. This allowed us to use charts, macro news, and market sentiment to time our entry and exit points. Phase 3 was performance evaluation and review. Across 30 simulated trades, we tracked total profit and loss metrics. To stay accountable, we conducted a granular review of our most profitable and highest loss trades to evaluate our rationale. Phase 4 was strategy, deconstruction, and conclusion. Finally, we review our operations strengths and weaknesses, drawing conclusion on the psychological impact of risk management and strict trade discipline. Now, let's look deeper into our technical analysis tool used to determine future price movement for FCPO, relying on four key indicators: moving average, MA20 and MA50. We use this to smooth price data and cash trends. A buy triggered when the MA20 crossed above the MA50. A sell triggered when the MA20 dropped below the MA50. Second, MACD, plotted between 12, 26 and 9 days EMA. We found a buy signal when the MACD line crossed above the signal line with a positive histogram. A cross below the signal line with a negative histogram prompted a sell. Third one is Bollinger Bands. This helps us evaluate volatility. When the price pierces the lower band, it signals an undervalued asset to buy. Touching or breaking above the upper band envelope flagged an overextended market to sell or take profits. Last one is RSI. We track momentum on a 14-day scale, and RSI below 30 signal an undervalued structure to buy before a rebound, while a rating above 70 suggested the market was overextended, which forcing us to sell. By combining this indicator, we execute as highly disciplined trading plan.
So now I'm going to talk about the fundamental analysis. On 12 July 2026, the Malaysian Palm Oil Board reported that inventories rose by 4.78% to 2.54 million tons, with production climbing 8.08% month on month to 1.64 million tons, the highest in 6 months. Exports also grew by 6.2%, but the faster pace of output led to stock accumulations. This raised concern of a downward pressure on futures prices if demand growth did not keep pace. On 14 July 2026, the Star highlighted that despite high stockpiles, analysts maintained an overweight stand on plantations. projecting average prices to 4,300 ringgit to 4,500 ringgit per ton. Strong external demand, especially from Indonesia's biodiesel mandate, helped cushion seasonal supply pressures. On 9 July 2026, the Borneo Post reported that the Sarawak Oil Palm Plantation Owners Association called for a review of the windfall profit levy, proposing to raise the threshold to 4,000 ringgit per ton and restore the levy rate to 1.5%. This reflects structural challenges in the industries, where taxation and sustainability obligation could influence profitability. On 13 July 2026, Malay Mail noted that Malaysia was expected to benefit from Indonesia's reduced exportable supply following the biodiesel mandate. The Malaysian Palm Oil Council forecast prices in the range of 4,300 ringgit to 4,700 ringgit per ton for the second half of 2026, supported by tighter Indonesian supply and El Nino risk. Finally, on 10 July 2036, the USDA revised Malaysia 2036 palm oil production forecast downward to 19.7 million tons, citing expected dry weather linked to El Nino. This introduces upside risk, as possible supply disruption could push future prices higher.
These slides present expert opinions regarding the effectiveness of combining Bollinger Bands, RSI and MACD in technical analysis. According to market experts and reference articles, these three indicators work best when used together because each provides different information about market conditions. Bollinger Bands help identify volatility and potential price extremes. RSI measures momentum and indicates whether an asset is overbought or oversold, while MACD confirms trend direction and strength. Let's start with Bollinger Bands. The main purpose of Bollinger Bands is to measure market volatility and identify unusually high or low price levels. When the price moves to the upper or lower band, it may signal a potential breakout or reversal opportunity. Next, the Relative Strength Index, RSI, measures market momentum and helps traders determine whether an asset is overbought or oversold. Typically, an RSI value above 70 suggests overbought conditions, while a value below 30 indicates oversold conditions. This helps traders anticipate possible market reversals. So the next indicator is MACD, which is Moving Average Convergence Divergence. MACD is used to confirm trend direction and trend strength. It helps identify bullish or bearish trends, and crossover signals are often used as confirmation before entering a trade. By combining these three indicators, traders gain a more complete view of the market. Bollinger Bands highlight volatility, RSI identifies momentum and potential reversals, and MACD confirms the trend. Together, they can improve decision making and help traders identify better buying or selling opportunities. However, experts also emphasize that no indicator is perfect. These tools should be used together with proper market knowledge, careful analysis and effective risk management to reduce trading risk and improve overall trading performance. The conclusion is the combination of Bollinger Bands, RSI and MACD provides a more comprehensive and reliable approach to technical analysis compared to relying on a single indicator alone.
So, our trading plan involved 30 trades across different MCPO contracts. The overall return was RM 64,625 ringgit, which means the strategy produced a net gain. Most winning trades achieved between 0.7% and 3.4% gains, while losses were smaller, around 0.5% to 1.2% declines. In short, the plan was profitable overall, showing that indicator combination works better than single signal. Okay, we start with profitable trades. For the FCPOV, we long using MACD and Bollinger Bands that capture a strong rally, earning RM 11,325 ringgit in 3 days. This trade show how combining momentum and volatility indicators can give high confidence entries. For the FCPOZ, we long with the same combination that produce RM 7,650 ringgit profits, thanks to aligned bullish signal and rising volatility. For the FCPOU, we long using MACD along May RM 4,100 in 4 days. Here, the daily MACD crossover match the short-term bullish sentiment and the price respect the stop loss level. For the FCPO August long, we based on MACD breakout that earn RM 4,000 in just 2 days that highlight the MACD and capture short bursts of momentum. Okay, for the FCPOX, we long using MACD and Bollinger Bands that achieve RM 2,400 profit in 1 week. The Bollinger Bands squeeze breakout and confirmed by MACD supported a consistent rising trend, and patience in holding the trade allowed the breakout to fully develop. So these profitable trades demonstrate that when indicator align and market sentiment is strong, trades can deliver significant gains. Longer holding periods also allow trends to mature, maximizing profit. So now we move to unprofitable trades. For the FCPOZ, we short using MACD that lost RM 675 ringgit in 4 hours when the bearish signal failed and the price rebounded quickly. For the FCPOX, we short also lost RM 650 ringgit due to weak bearish momentum and lack of confirmation from other indicators. For the FCPOV, we short also lost RM 1,500 ringgit in 3 days, while another short entry in the same contract lost 2,550 ringgit due to poor timing against a bullish overall trend. This highlighted the danger of trading against the broader market direction. Finally, FCPO September, we long using Bollinger Bands lost RM 1,600 ringgit because of a false breakout. The price failed to break resistance and reversed downward, showing the risk of relying on Bollinger Bands also without confirmation. So these losses emphasize the limitation of a single indicators, the risk of false signals, and the importance of aligning trades with the overall market trend.
Starting with the strength, we combine both fundamental and technical analysis in our trading decisions. We regularly follow market news from The Edge to stay updated on the market trend. We also use TradingView and several technical indicators including MACD, stochastic RSI, moving averages, and Bollinger Bands to identify suitable entry and exit points. This helps us make more structured and well-planned trading decisions. Next, these indicators play a different role in our analysis. Moving averages help us identify the market trend. MACD confirm momentum and trend direction. Stochastic RSI highlight overbought and oversold conditions, and Bollinger Bands help us identify volatility and potential price extremes. Using them together give us a more complete market view. However, we also face some weaknesses. At times, we didn't close position quickly enough, which lead to larger losses. As a beginners, we lack some experience and confidence, and occasionally we held trades too long because of greed, expecting higher profits. In terms of results, our trades were generally satisfactory, although not all were profitable. Regular market monitoring helped us achieve several successful trades, but mistakes such as late exits also resulted in losses. Overall, this experience taught us the importance of discipline, confidence, and proper risk management in trading. Throughout this project, we gained practical experience in applying trading knowledge to real market situations. We learned how to use several technical indicators effectively, including moving average, RSI, Bollinger Bands, and MACD. Each indicator serves a different purpose, Moving average help us identify market trend. RSI show overbought and oversold condition. Bollinger Bands highlight market volatility and possible reversal points, while MACD help confirm momentum and trend direction. More importantly, the trading game improved our technical analysis skills and taught us to become more disciplined and adaptable in changing market conditions. We also realized the importance of having a clear trading strategy and proper risk management. In conclusion, this experience increased our confidence, strengthen our trading knowledge, and provide valuable preparation for future real-world trading activities.